All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thanks so much for taking the time out of your day to join me this morning and every morning, 9 a.m. Eastern Standard Time here on the YouTube channel. I did not do a YouTube yesterday. Went out to some breakfast with family. We did a video for Discord members. I did the newsletter for Discord members. Anthony did the weekly video, and Nick did the recap or the was it the watch list? Excuse me. So, guys were prepared for the week, anyways. So again, it was kind of overkill. So I decided just to take that. In terms of the market, just want to give you guys a heads up. This week, I don't expect much. I know we were down yesterday, but in terms of the bit broader picture, the bigger picture, we don't have a lot of economic data. Yesterday, we did have ISM services PMI that was higher than expected. That brought inflation expectations and the Fed pause or Fed slowing down of rate hikes being less likely or not as accommodative as people expected. So that's what kind of caused the fall in the market, at least in terms of a headline issue. So let's go to Forex Factory, something a little different than we usually do right in the beginning. Here is the week that we have, guys. The week that we have right now, S&P, for the week of this week, with the OPEC meetings, they said they're not changing anything. We know that on Sunday. The ISM PMI, that came higher than expected. Let me get the updated number. Yesterday's ISM number, this is services, not manufacturing, 56 and a half. So again, that's still an expansion. Anything above 50 is an expansion. Tuesday and Wednesday, not much going on in terms of economic data. So again, it's really going to be focused on macro and technicals moving forward until the gauntlet, which is this next week. You have CPI on Tuesday, FOMC rate decision on Wednesday, Thursday core retail sales, and we have a PMI on Friday. And that's pretty much the last full week we will have in the market for the most part, because the 23rd of December is literally the day before Christmas Eve. So again, I expect the volume to be very, very low as we start winding out the end of 2022. So again, just keep that in mind that we're really just focusing on technicals and momentum and macro as we move forward. So let's go around the horn. Dow futures pretty much flat-ish, down 41. NASDAQ down 13 points. S&P flat. Russell flat. Crude oil down 1.5%, 75.73. Gasoline futures down 0.44%. We are now at the same level we were on gasoline futures as we were last year, basically flat. Let's take a look at it. Let's see, /RB. And we're going to go ahead and go to the yearly and pretty much almost there. We go start from here. We're right there. This is from December 31st. Gasoline futures were at $2.13. $2.19. We're at $2.19 now. So again, you can see this big pop. All of this was the rate shock, inflation shock, Russian invasion of Ukraine, OPEC, all that jazz. The dollar soaring, you name it, everything come together. We got as high as around $4.32 a gallon, and then we just split that up. So again, we're basically almost 50% of half of where we were at the peak. So again, guys, things revert to the mean at the end of the day. And if you want to bring up S&P, you can kind of do that too. Again, basically from where we are not at where we were at the beginning of the year, obviously. But again, seeing gasoline futures come down is a good thing for consumers, especially when we had over $5 a barrel in the summer. Volatility index down about 0.72 this morning, 2060. 10-year Treasury yield, 35.57, down about 1.17%. 3.557. Dollar is down 0.15%. So let's keep it moving here. Gold futures are are up 0.47%, 1789. Silver down up 0.66%. Copper is up as well, $2.81. Remember, we kind of talked about copper, how important that was to the global economy. Shows that there's demand and growth and construction. So again, copper is something to look at. We'll take a look at the chart here on the yearly. And again, kind of the similar thing to S&P futures. Again, that 200-day moving average, that downward trend, very, very similar. You're getting a lot of those connections with the S&P market, euro dollar being one of them, the inverse correlation with the dollar, inverse correlation with yields, and now you have a slight correlation with copper. So again, just trying to find little hints here and there for we could see where we're going. Speaking of euro dollar, we are at 105.08. We'll go ahead and chart it rather quickly. And again, very similar to the S&P 500 futures. So 1060 Euro dollar, that's what we're looking for, 106 currently. That's what we're looking for that trend line. Dollar yen 136.42, that's down 35 pips. Pound dollar 122 even. Bitcoin futures are up 0.68%. And then we have Ethereum at 1249 currently. Okay, let's go ahead and go around the horn in terms of macro. So we'll do that. We're going to go ahead and bring up our RSIs. So let's go ahead and do that. All right, so here is the S&P 500 futures. And again, I drew a couple of lines on the screen. I know there's so much going on. Let's go ahead and break this down. Purple line is your 20-day moving average. So you have that idea. Blue line is your 100. 50 is your 50. Yellow is your 50, excuse me. Red is your 200. I always try to make sure that's known ahead of time. So again, below the 200-day again, remember we broke above that, cleared above it, settled above it, and you can see now in terms of the market, again, we just pretty put just a couple of channels here. Really an upward wedge is what we're seeing here. And we're still within that area. See that green line here? Again, kind of connected here to the last couple of points here. Same thing here. So again, kind of tightening that range like we talked about last week, that the tighter and tighter we get into that wedge, things are start moving. The question is, do we get more upside, possible bull case of 4,300, or we can go back down to 3,900 and break that and kind of settle around 3,800 before the holidays, which could be possible. I don't expect that to happen, but let's go ahead and see if we hold this trend line here. We could see that the RSI is right in the middle, 54, not exactly elevated, slightly elevated to overbought, but nothing crazy at all. We'll go to the volatility index to kind of give us an eye. 1867 is my support. You can see kind of just holding that base here. Same thing as in August. We want to see if we get that break. Let's go and break up the 10-year yields. Very, very important. Again, the head and shoulders still in play here. Waiting for that 100-day moving average to break. That's sub 35. So again, we need about 57 more basis points to the downside for yields to kind of boost us up a little bit on the S&P. There is a gap to fill here on 10-year yields, 3.693. Let's go ahead and take a look at our friend the dollar, mighty dollar. And again, we're looking at a lot of trend lines here, and a lot of it probably doesn't make sense. So we're going to have to expand this out a little more and go to the monthly chart. And if you guys remember, we had this chart now for months. We broke out of this 110 level, again, very, very cleanly, came back down. And now we have a little bit of a channel here, and we're right between that. So we want to get, again, below 104-ish, 103.66, really to kind of get us down to the next level over, maybe down to around 101. Sub 100 would be great. Sub 100 on the Dixie would be a very big boost to S&P 500 and to equities because they are priced in dollars. That's what we're looking for. So let's go ahead and get back to S&P. Yesterday, we did have on the watch list Square. We did catch that. We got it right at the top. Well done, team. But again, very well done trade. Right in the morning, we caught Square for about 100%, and then it fell. So kind of sideways action here as we fell yesterday quite a bit on the S&P. Got around 40, 70, about 70 handles on the S&P just yesterday. So again, it's a lot of waiting right now. Again, not a lot of news. A lot of it is just technical analysis that we have to go by in patterns since we don't have much to go by. There's a Fed blackout period right now. They can't really speak. There's no speakers until the FOMC next week with Powell. We do have CPI next week, but we have PPI on Friday. So that's something to look forward to. But as of moving forward right now, it's really just technicals and it's really just macro. I wish I had something more for you, but that's all we got right now. So again, as we get closer to the end of the year, expect those volumes to dry up. But next week will be a bigger volume because we have FOMC, we have CPI, we have all that data coming out. And if you guys remember 2018, when the Fed did raise in 2018, that was the last rate hike, we sank. So again, I remember that very vividly. That was not a fun time either. But again, it's something that you need to keep that in the back of your head. Maybe you're probably buying some protection here as the VIX is near the lows. But again, if you start getting below 20, that's usually probably a good sign to buy some insurance or some protection on your portfolio if you are trading. If you're just someone who's an investor right now, none of this really matters. You're just trying to see if there's any kind of move upside or downside to take advantage. So we'll go ahead and leave it there. Ray with his eyes, he always tweets me that. He's such a great guy. Ray always looking out. Big fan of ours. Appreciate you guys. Thank you guys. Again, if you like these videos, please hit that like button. Really helps the channel out. Love doing it for you guys. Thoughts on coin? Coin is really just based on Bitcoin. Goldman Sachs is talking about buying some crypto assets. So again, not all is lost in terms of that. But Bitcoin, again, if you're buying here, you're really playing a turnaround. You're really playing a high risk turnaround. Lotto ticket, at least in the short term. If you think crypto long term is going to be okay, I do think so, then Coinbase should be bouncing up down the line. But again, it really depends on your expectations, your timeline, your risk tolerance. It's not as simple as that. Should I buy this? There's very few companies out there that you could buy just pretty much any time. I'd probably equate that to Apple, United Health, another company, but again, it's near the highs. Again, Coca-Cola, those names, the S&P 500 futures, something like that, or S&P 500 index if you're dollar cost averaging. At that point in time, those kind of names, the price doesn't really matter that much the way a coin would be, because coin would probably be either a trade or looking for a speculative an investment that you're looking for. But again, look at this, from 290 last year to 46. You're talking about risk, it's staring right in front of you. Hey, thanks, Ray. Appreciate it. Love doing the updates for you guys. Again, it's something that I love to do for y'all because it's important to talk about, and it's always fun. Have a great rest of your morning. I will catch you guys tomorrow for the morning note, and let's make it a great week. So far, pretty chill, and let's see if we get some volume moving forward. And next week is the gauntlet. So let's see what we get this week and moving on to next week. Have a great rest of your morning. See you guys tomorrow. Cheers.